You don't have to be a genius. You don't have to have any understanding of the fundamentals of the market or the companies. All you have to understand is they're printing money. Don't fight the Fed, get long. The people who just bet on the Federal Reserve actions are the ones who are benefiting. So what this shows us, again, it's a reminder, the stock market is not an indicator of the health of an economy. The stock market is an indicator of central bank actions. As long as the central bank is printing money and injecting that liquidity into the markets and into the economy, stocks are going to continue to go up. And so my favorite thing that we've seen is that everyone is yelling and screaming and hating Dave Portnoy and the whole Barstool thing, where they're literally just buying random stocks and yelling stocks go up. They always go up. He's right. When the Federal Reserve is printing money like this, stocks always go up. It's literally how the market is structured. And that's what's happening. This isn't financial advice. It's just how the market works.
What's going on, everybody? This is Jordan with Conquer Trading and Investing. We're looking over here at a chart of the S&P 500, and it's tracking the Fed's balance sheet. You could see over here in green is the Fed's balance sheet expanding ever since the mid-March crisis over here. And you could see it's now winding down a little bit over the last couple of weeks. Now you could see over here in brown the S&P 500, and you can see following the Fed's liquidity, the expansion over here. And if you look exactly what's going on right now, technically on the S&P 500 over here, you can see that we're pulling back first into this area of support we have over here down between 29.72 and 29.47, right? So call it somewhere around 29.55. 29.60. You want to be a buyer of the S&P 500 over here. If this trend line over here holds, if that holds and we resume off that is absolutely a place to look to go over here and buy into the S&P 500 and any prolonged pullback, not just to the low over here, but even deeper back into this resistance you could see on the level over here of 28.73 and 28.58. This area over here is absolutely some bigger support that we would like to be able to also buy in on any retests. But here we are right now. We've pulled back off the high. Let's take a look over here. We've pulled back off of the June high about, well, right now, we're about 6% off that high. We went as far as down on the first initial spike down almost about 8.5%. So, you have to ask yourself, how much further downside do you think we're looking at over here on the S&P? When is the next moment that the Fed is going to be expanding their balance sheet? There's talk that the Fed's balance sheet is going to be at $10 trillion by the end of this year. That's over the next 6 months, almost a 50% increase of the Fed's balance sheet. So they're talking about infrastructure projects. We'll see what other type of stimulus programs are restarted as the current ones are winding down over here. You could see this playing out over here. This is looking at the FANG, and you could see that tech is coming off, and tech still has quite a while, all the way to 4,700. It would be a nice size pullback, especially after the excessive gains that we've seen put on over the past couple of months. Looking over here at the dollar index, you can see the dollar is firming up a little bit over here. The DXY, we're going to take a look at that tomorrow in the planning the week ahead Forex forecast and analysis video. But the dollar seems to be in a place where it's firming up a little bit ever since the FOMC meeting, ever since the Fed did not go ahead and say that they're going to control the yield curve. The dollar has been bid, and that dollar firmness that we're seeing right now, that has the possibility of continuing a little further. We'll look at that definitely during that time. And since the halving, Bitcoin has been consolidating in a $1,000 range between 9,000 and 10,000. It has been consolidating ever since the halving. It took a 20% drawdown, spike down that was bought up very quickly. And then since then, we went ahead and traded it to the big resistance at 10,400. And since have been consolidating. So that's a nice look at Bitcoin. This is crude oil. And what you're looking at over here is crude oil putting in this nice triangle pattern over here, this green line over here, there's support. If and when that breaks to the downside, that opens up a nice opportunity for those who are looking right now and watching for a place to build a short into crude oil, which is in a really, really strong downtrend. On the other hand, you could see over here, if we're able to clear to the upside, well, then we're running out of sellers over here. And then all of a sudden, we're going to start breaking to new highs. So that's a clear way to play crude right now. Gold to silver ratio. Too bad this chart only goes back into June 21st. And the reason I say that is because it really topped out back in March. The gold and silver ratio really topped out, spiking and accumulating during the crisis. I think that was the long-term trend change on this. And any type of pullback that we're seeing right now towards the favor of gold should be sold. I think we're going to see further appreciation of silver during these next 12, 18 months or so as gold and silver really go on to following the expansion over here of the Fed's balance sheet. I think they're going to go on and they're going to be really experiencing a nice market. This is interesting chart. This is S&P 500, which you can see has started coming off. Now we are following that it is connected to the Fed's balance sheet. On the other hand, you have to also consider that the 2020 election forecast, this was around the time that it was forecasted that it looked like Biden was going to be was going to be winning the election, and you could see stocks since then have also been trading down. We'll have to watch that connection going forward, and it could be another situation like it was in the 2016 election, where all the polls had had Hillary Clinton winning, and there was some other what do they call it, like, I don't know, alternative news sites that were saying that Trump was firmly in control. That's what it turned out to be, right? And then that was one of the best nights ever for trading. The reversals in the markets when the markets found out that Trump was going to win were incredibly bullish, and that was one of the best trading days ever. So what are we looking at right now? By the way, I just want to share this with you from a member of the Conquering Markets trading group, and was talking about that. I'm going to actually read this to you to start this off. I'm going to read through the whole email with you and answer it at the same time. All right, so it begins, took some money off the table, still holding partial amounts of those 3 trades I started the week with. I entered only 1 trade this week, taking a long on the pound Australian dollar. I found out there's another advantage when trying to push trades, right? We're talking about managing trades here. While waiting, there is no feel of FOMO, which is the fear of missing out. I was hardly looking for new trades since I wasn't feeling like I was missing out because he was involved in a good trade and really allowing that trade to take place. Must say it feels weird to me that we're not talking about entry and exits, stop loss and take profits, right? Because in most learning situations over here, the focus is on entry, exit, stop loss, and take profit, which these are all covered, of course, and they're an integral part of the strategy. But you're right, that's not what we're focusing on. And that's why we're seeing the results we're seeing. We're focusing on what's important, and we'll get into that in just a second. I do have some experience in that helps me a lot. I have no idea. So he's saying he does have experience with entries, and he has no idea how you teach students less experienced, and I certainly hope I'm making good calls here, and I'm sure there's plenty to learn. Yeah, so what I'm getting here is that, well, it feels good to now turn the corner to profitability, right? First step, 3 to 5 weeks, turn the corner to profitability or better, right? And it feels good to be there, but now you're like, all right, now I know that if I work more on entries and get myself into good trades, and I know that if I have better stop loss placement, right, and I know where I'm looking to take profit better, I know that's going to help now improve my trading, and it's going to take me from break even or better, and that's going to be the difference I'm looking to make over here, getting me to consistently profitable, because from there, I could scale up to meet my goals. And that's what we're going to talk about over here. 1 second. Congrats on the new site. Looks great. I saw the video you uploaded about realistic profit targets. Now, it's true that you can make 2.5 monthly over 15 years. You could pile up a nice sum of money. And if you deposited an extra $250 monthly over those 15 years, yeah, you would reach 7-digit number. But my point is different, right? And this is also, so the first point is, all right, now I need to really focus in and work on entries and exits, right? But you can't this is where you are now. You had to first get to break even or better to be able to now be able to work on this. And this is what we're going to be working on right now. Now coming back to over here, he says that his point is different. If you could make 20 or 30% a year, which I believe now for the first time, and we'll get into, what he's been doing on a demo for the past month, but now he sees, he or she sees that that's entirely possible. I could do that, right? Thanks for sending the video on what my goal should be. Now I see it. And now I believe, even though I wanted maybe to trade full time Forex for a living and begin with not $50,000, not so easy to do, not so easy to pay your bills, right, and grow your money at that with that type of rate. So by the way, without any big drawdowns, if I could do 20-30% a year without any big drawdowns, then is rare. That is beautiful. Those numbers you don't see in traditional investing. I was looking at this retirement calculator. It's networthefi.com. And someone sent over this link and was really into, and actually someone in the program, they have actually over the last 4 or 5 years been able to get themselves into a position where they're now financially free, meaning that their annual income, right, and their annual expenses allows them to have such a saving rate that with growing their money, and it assumes a 30% rate of return. We'll look at that in 1 second. It's interesting that that's kind of the number they assume that you have down over here, 30% of return of investments. That's the calculation they assume that you're able to make. For example, let's say you had a salary of $80,000, right? And if your expenses were $40,000, all right, and you had a savings rate of 50%, all right. And let's say you're starting from zero. You don't even have any savings right now. This says it's going to take you 8.5 years, right? With a savings rate of 50%. At that point, your annual expenses are not as much. You're making more than your annual expenses. All right. But that's assuming a 30% return of investment. That's obviously not something you see in traditional investments. I'm really glad that he's here in the program because he could do that here. He could make that 20-30% a year. Well, if he's able to follow through, right? Follow through with the training. So getting onto here, he says, what should you do then? In my opinion, I should go to the nearest bank and to get out $100,000 and start working with that amount right away. But I have you under a demo account right now, and you're talking about going out and starting on $100,000. But we've only been working together for 4 weeks, one month. So not $3,000 in the example you gave. Yeah, so when I started in the video, what I did was I gave an example that works so people could understand, starting with $3,000 and in 15 years making that 20-30% a year, right? That you could turn that into a significant amount of money. Now, if you could start with $100,000, well, then you're gonna make your goals in a couple of years rather than 15 years. Same thing here though. If you're able to actually increase your income, let's say that someone was making $120,000 a year and they were only spending that same $40,000, right? Then, instead of 8.5 years, you're talking about 6 years. You're talking about 6 years, which is that's pretty good starting from zero. Starting from zero in 6 years. But you gotta be in the mind frame, the mindset of using this to your advantage over time as compounding. You're not looking to live off that from day one. So, but let's get you to the point where you can take out that $100,000, where you could go ahead and take out that $100,000 and start from there. We looked also in that video about the different levels that you go through, right? But the reason that you trade under a demo account, because if you're not trading on a demo account, then you don't learn how to actually trade. If you feel that you need to start with real money in order to see results, well, then your path might be a little bit longer. It's by starting on a demo account, and on a demo account achieving what you need to do on real money. And we're talking 3 to 5 weeks to get exactly where you are right now. You could see that you are holding currently 2 positions, right? Up another, 1.49%. So in your basically first month with the program, in the first month, you are trading at break even or better, up about 1%. The interesting thing is that, right, you don't really need to go much further than 1% a month. You don't to meet your ultimate goal. Your next goal is to be able to do this for 12 weeks, to be for the next 12 weeks to be profitable. That's your goal, right? So, once you're there though, and if you're already making 1% a month, 1.1% a month, all you need to do is go from your risk right now that you're using, which is 0.5%, to 1%. All you need to do is start trading, risking per trade, 3 trades a week, 1%, and now you're making, 2.5%. So you're almost there, which is why you're not, all right, now I need to what do we do? How do we improve on this? Because once you improve, right, and once you're making a steady, 2 to 3% a month, only risking 1%, right? You at this point, it's really easy now to scale up with the amount of capital you're trading and go ahead on to meeting those financial goals that you're looking to meet. Both first to have your expenses covered for the year, to be completely self-sufficient, and then as well as to continue to grow your account. And yes, being able to also take out income from that you could go ahead and that could become your primary income. That's the main goal. That's the entire goal. So you could see, and he could, I see that you see that it could be done. Because going back 1 month ago, you were like, "What? I'm not getting this, right? This is what's going on." And I was like, "All right, well, you need to follow the course. You need to do this, and this." Right? And now we're seeing real results. That's exciting to see. We need, we need that mindset right now, though. You need that mindset right now that for the next 12 weeks, your only goal on this demo account here is to do this same thing that you're doing now and improve on it a little bit. And then all of a sudden, you're not far away from meeting your ultimate goal, which is insane, right? How much does the course cost? Hardly anything, right? So the value's there, but that's not what we're talking about right now. What we're talking about here is over the next 12 weeks, you do this on a demo. Then you could get behind that $100,000 account, go to the bank, get that $100,000, and consider this as, a business opportunity, because you'll have that experience of knowing what it takes. It's right now easier for you to push those trades that you're pushing and learn how to trade correctly, because you're doing it under a demo account where you're not risking money. Why would you start risking money when you don't know yet how to profit from the markets? Why not learn on a demo account? You're talking about 3 to 5 months, right? 3 to 5 months. University is 4 years, and you come out and you're like, what did I learn? YouTube, 4 years on YouTube, though, you can learn a lot. All right. Anyway, so, at that point, you could go ahead and you could start with whatever sum you need to start with for the next month after that. You don't have to. You start with 100,000. You could start with 50,000. You could start with 10,000. You could start with 5,000. And I've shown how you could start with just $3,000 and what is attainable. Of course, the more income that you're bringing in, and the more money you start with from the beginning, the easier it is going to be to meet your ultimate goals. But it could be done starting at zero. All right, so getting back over here to where we're looking at the markets, because we are seeing that little bit of dollar strength coming in the markets right now. And we're seeing if we do break above this area that we're looking at right here next week, if we break above this area, right, then, this 98.30 level that comes into play again. Whether or not it's an extension of this trend line over here that we come into, or it's this horizontal line. But in this area over here, we got some big resistance, and we'll see if the dollar's able to make a stand over there and trade up, or it's rejected. And this is the place now, actually, as we're looking at we're looking at the Fed getting ready to expand its balance sheet. Maybe that's going to be a good place, to get short. Not that we're going to see some huge moves to the downside, but is it possible that we break 94.73, the lows over here that we put in? Yeah, that would be something that would not be surprising, and it really would not mean such a weak dollar on the larger scale of things. So what we are watching, though, at the end of the day is this. We're watching and we're expecting. I think the Fed is taking the balance sheet up. I think they're going to be doing it sooner. We're talking sometime in the next 6 months, by the end of the year. The U.S. Treasury also sitting on $1.5 trillion. They're going to be putting that money to work. I see stocks going up in this environment. I'm looking at places, including right now, at all important support levels to hold and to buy off of them. I'm not interested in building in a short position for any type of crash. I don't see a crash happening, and if the markets start crashing, then we'll be there on to take advantage of that. All right, everyone, have a great weekend. I'll see you all Monday. If you're still here. If you're still here and enjoyed the video, if you learned something, if you appreciate it, go ahead and smash that like button. Show your support and love for the channel. If you have anything you want to share below with the community, please do so. All right, everyone. I'll talk to you soon.